Hi everybody, my name is Mary and I wanted to talk a little bit about the Euro-US dollar pair. This is most people's favorite pair because it's very liquid and there's generally a lot of volatility in this particular pair, so there's almost always an opportunity to make some money. And if we're looking at, what I like to look at is a monthly chart here, we see a bearish pattern. This is a wolf wave pattern. We have 1, 2, 3, 4, 5, and the sixth move should be down. I'm also looking at a heavy resistance line right here. Now that doesn't mean that it can't break through this line, but it means that it's an unstable chart pattern. And I think, as a lot of people think, that the next good move in the euro is going to be to the downside. It would have been nice to have picked the bottom here or here, but I think it's too late for that. I think the upside is going to be limited from here, and I think that we're going to have a possibility of a very good, profitable short trade, although it might not be this week, in the next week or two, and over the coming months. The euro is still considered a riskier currency than the dollar, although, of course, what is risk? That's all subjective. I mean, it's difficult to gauge or define risk, but the fact of the matter is the euro hasn't really been trading as long as the dollar, and it's considered riskier because they had this continuing, ongoing saga with the sovereign debt issues in some of the smaller peripheral nations. But the fact of the matter is the stock market has been rallying for 6 months, and the riskier currencies have been on a strong tear. And this might very well continue while the Federal Reserve keeps its quantitative easing program open, because once they go into the market, they continue to buy treasuries every day. That gives the individual or the institution who's been selling the treasury a lot of cash, and they have something to do with it. So the money ends up frequently going into the stock market or into gold or commodities or other riskier type assets. Now we have this second situation where the ECB is going to have a meeting this week, and it's anticipated, it's already priced into the market, that they're going to raise rates by 25 basis points. So what I want to look at this week is the statement or the bias of ECB President Mr. Trichet, because I think that's going to make all the difference. Now, of course, there is a risk that he might just leave rates alone. That's not really very likely, because they've been talking about raising rates for a period of time, and if they just leave it alone, it would lose credibility for the ECB. They could also raise by 50 basis points, which would be kind of a nuclear option, but I don't think that they're going to do that either. It would really shock the markets. So if they raise by 25 basis points and they give a hawkish commentary, then I think that we could see the euro break out above this resistance line. It could probably even go up to 145. And by hawkish, what I mean is if he said something like, well, the ECB continues to be extremely vigilant about continuing increases in inflation, and we want to keep focus on price stability, something like that, talking a lot about inflation or talking about increases in inflation, then he's going to signal to the market that they're probably going to raise rates again. If he gives a dovish commentary, which might be a little bit more likely if they say something like, we expect inflation to moderate over the near term, or we expect inflation to moderate for the rest of 2011, then I think you could get a really good short. I think you could get a short trade which could give you, a very good pip profit, 200 to 500 pips, even more. You might even start a new downward trend. I don't think we're going to start a real downward trend in the euro-US dollar pair probably until the ECB changes their bias, gives an indication they're going to stop raising rates, and we have the Federal Reserve that stop their quantitative easing or slow down their quantitative easing, which we need to keep an eye on, because if the average weekly or average monthly purchase of maturing obligations slows, and they begin to talk consistently in a hawkish way, maybe even raise rates, then we're definitely going to see the dollar rally, even though I think a lot of people have been hypnotized into believing that it's never going to happen again. Well, but these things do change. I mean, it always happens. Trends always change. Nothing goes up or down in a straight line forever. So that's what I'm going to be keeping an eye on this week for the euro dollar. Of course, what the ECB President Trichet might do is simply come out and say, well, give a non-committal type of speech or bias. He might come out and say, well, we're simply going to continue to moderate the situation and respond appropriately. And then everybody would simply be jerked around wondering what to do or what to do next and how the euro is going to move in response to the next series of economic reports. That's always a possibility, but usually they do give some type of a signal as to what they're really paying attention to. And of course, we've got this ongoing media attention to the sovereign debt issues in the EU, which aren't going to just go away. And I think if the ECB is too aggressive with interest rates, of course, it's going to push some countries into a severe recession or depression. So I think that they may moderate it. So that's what I'm keeping an eye on for this week. I'm going to listen to the statement, and I'm going to go look for a good level to short, because I think good short opportunity is coming up.